Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back once again to the Fintech Times News and Views podcast. Francis, Tom, how are you guys doing this week? Are you ready to talk about fintech?
Hey, Polly. Hey, Tom. I'm very excited to be here today. We've got a bunch of great stories, and I'm looking forward to talking fintech with you guys today.
We're looking forward to getting stuck in.
Amazing stuff. Well, we have a bit of an accidental payments special today. I'm pretty sure all the stories that we want to talk about are all about payments in some way or another. First of all, what are we talking about today, Francis? What are you talking about?
So today, I'm going to be talking about how over half of consumers are ready to abandon their transactions after a poor payment experience, according to TrueLayer.
Amazing stuff. Tom, what are you talking about today?
Today, I'm talking about a financial management platform, Solo, which is launching 2 new financial tools to help independent contractors get paid in the US.
And I'm going to be talking about Klarna's partnership with the Money Advisor Network in preparation for the FCA's Consumer Duty coming up. So who wants to go first? Who should I pick on first? I feel like, Francis, you've got energy today, so you can take the lead with us and go first.
Absolutely, yeah. So as I mentioned, today I want to be talking about cart abandonment. I mean, it's something that we've spoken about before on the podcast, and I think when we've usually spoken about it, we tend to really sort of look at it from an industry standpoint of what can organizations do or what can fintechs do, I should say, to help organizations. But I think this week I really wanted to sort of almost put it like the spotlight on us a little bit and sort of talk about, the experiences that we've had and that, how many times have you really abandoned a cart because of a poor payments experience? Because I know that I have, and, I'll get to that in a minute. But I just wanted to sort of go through what the findings were from the article first. So as I mentioned, the study comes from the open banking payments network TrueLayer, and it found that almost 9 in 10 consumers are frustrated with their online payment experience, leading to the potential for an increase in abandoned checkouts. So 55% of consumers would abandon their transactions because of a poor payment experience, highlighting a need for merchants to explore alternative payment methods as a way to elevate their customer experience and drive continued growth. 73% of consumers also say that slow or frustrating payment processes will make them more likely to abandon a transaction and try elsewhere. Meanwhile, 56% of consumers say that poor payment experiences make them less likely to remain loyal to a brand, impacting long-term revenue for merchants. TrueLayer also revealed that some merchants, particularly smaller ones, are struggling to implement strong customer authentication, which has proven to be a big thing when it comes to, payments and succeeding in a checkout experience, right? Because you got to authenticate that the payments are legitimate, that they're all coming from who they say they are. So yeah, like I mentioned, there's 2 things that I really wanted to talk about with you guys today. Like, first and foremost, have you had a bad experience that has ever made you abandon a cart? And secondly, how can merchants really improve that strong customer authentication to help drive, once people are in their cart, they're all ready to make the payments. It's not like they're sort of in between. Like at the payment point, people are prepared to make the payment. It's just that final hurdle is what's really stopping people. So, what can, I suppose, organizations, I mean, I guess that comes back to the point that we've spoken about before, but what can organizations and fintechs do to help these small businesses? Polly, I'll go to you first.
Yeah, this is something that I think we hear a lot at the moment, kind of the companies striking the balance between fast, efficient, speedy payments versus safety and security, obviously, which 2 very important things, because I think as we've spoken about quite a bit in the past, is that customers and their demands are really what's leading the industry right now, especially when it comes to something like payments, because obviously that's a very consumer thing. Everyone makes payments. People make payments literally every single day. And so you want to be able to do that very quickly. And I think, obviously, in the modern age we're all very impatient people now. And especially when you think about shopping online, you just want to like instantly be able to buy the thing that you want. And, some places like Amazon, you can do like literally like push a button and it bought and it'll arrive at you the next day sort of thing, like lots of instant buying and things like that. So I think that does reflect in the wider industry that people want to be able to pay for things very quickly and they don't want to wait for the time it will take for the SCA to be able to do the checks that strong consumer authentication requires. So I think it's a really interesting balancing act, because obviously you can't get rid of SCA, but at the same time, as a result is, like you're saying, you get the abandoned checkout. So you've really got to travel this line. And I think it's very interesting what was said in the article from, I'm going to absolutely butcher her name, but Nadia Bennett, who is the strategic accounts director at TrueLayer, and she said how the report revealed the huge gap exists between consumer expectations of payments and the reality. And I thought that was a really interesting thing, that people are expecting their payments to be entirely different to actually what's been achieved and what is happening. And you wonder kind of what's fueling that, what is making customers think that payments can be a quick and easy, simpler thing than they actually are in reality. So I thought that was really interesting. But I think the problem is that you can't get rid of SCA, right? You can't get rid of the authentication. You can't get rid of the fraud fighting methods. You have to have that security in place. Otherwise, you'll lose customers that way instead, because they'll be scammed and all their payment information will be leaked. And then, so that's an even bigger problem. So you kind of have to try and just, I guess, work with consumer expectations and try and sort of get them down a little bit. But at the same time, is I think having alternative payment methods and sort of different technology implementation, that is going to be one of the ways that you can deliver on consumer needs and expectations while still maintaining the security. So I think a couple of episodes ago we talked about like open banking. That's obviously like the big thing at the moment, and how that's going to be how we kind of navigate this world of safety versus speed in payments. And it's just, I guess it's one of those interesting things, because obviously you just can't turn off the security. So you're going to have to find different ways to make payments work for consumers.
Definitely. And I think one of the big things that you've just said there, which sort of stuck out to me, is this idea, from what you're right, Nadia Bennett said from TrueLayer, which is this idea of, instant payments and where they come from. And it is this idea, I think you're right, highlighting that Amazon, it is literally just the click of a button. You don't even need to do the checkout really anymore, because you have your saved details on there, and it's just a buy now thing. You have all your, delivery options, billing address, all that stuff already saved. And it's really that simple. So I think, when you're looking at it from that way, it becomes very difficult for smaller organizations to compete. And I suppose in like the sort of the market that we're in now, where it is a case of, it's a case of speed, right? And I think when smaller merchants can't compete with the, speed of the juggernauts like Amazon, for example, it just becomes very difficult to sort of, from a customer standpoint, to sort of justify why you'd go there instead of, like an Amazon. So I think, yeah, there's definitely, I think SCA definitely needs to be improved. And I think it would definitely help in the sort of growth of these smaller businesses. But just before I get your thoughts, Tom, Polly, have you ever had an abandoned experience because of,
So many times, and most of the time as well, it's not necessarily like me going, oh, I'm sick of this, I can't be bothered anymore. It's more like the text hasn't come through, you know what I mean? Like when you have to like put in the text to get the code to authenticate your payment, that's just not come through, and I've waited the up to 10 minutes it might take for it to come through, still nothing. I've clicked the button that says my code hasn't arrived, and it sends another one, I still not got it. So I physically cannot make the purchase. It's not a case of I've gotten bored and I've decided no. It's that the technology just isn't working, and it's happened so many times, like so many times for sure.
I've always had the one where you have to authenticate it through your mobile banking app. When it sort of, I don't know,
Oh, that
maybe you
drives me
guys.
nuts as well.
Yeah, that's the one that I always seem to have. Tom, what about you? Any thoughts on the SCA, or either, have you ever had an abandoned shopping cart experience as well because of something like this?
I think you've both summed up the topic really well, to be fair. So at risk of sounding like an echo, I was just going to say, like, we have been spoiled. Like, talking about the likes of Amazon, I'm guilty for, if I need something, let me just jump on Amazon. 10 seconds later, I've typed in I need batteries. I'll get the batteries sometimes the same day. It literally is one button checkout done. And I think we're spoiled in that respect, that and that's one of the reasons why Amazon dominate the space so well, is because it is, if anything, too easy. And it's there are no barriers, literally nothing. You just have to click what you want, check out, cart, one more button, you're out. It's coming to your house. Everything's saved already from your past purchases. I have to say, like, as Polly said, the only time I've actually personally been stopped is when the process at another sort of retailer, it doesn't work out. Like, you don't get the text, you don't get the email, you don't get sent a code or a link or whatever, and that's the reason you can't actually continue with the purchase. In terms of like going to your bank app, obviously that happens to us all quite a lot, to authenticate the purchase, prove that it's you that's buying whatever it is you're buying. I don't know, for me that tends to work all the time. I don't think I've ever had any problems with it. It's not normally a barrier for purchasing. I think sometimes I'm quite surprised when I saw the stats how many people say they have abandoned purchases because of like a slow or slightly more painful experience. Because generally speaking, I mean, maybe I'm just not buying enough stuff online, which probably isn't a bad thing. That's why I'm sticking to Amazon. But I don't tend to have too much friction when I'm buying stuff online, even if it's like a smaller retailer, buying something. So, I think the thing that surprised me was just how many people, in not just this survey, but ones that we've looked at in the past, how many people are willing to just abandon a purchase because of any kind of friction. So, but that balancing act that you two mentioned with the SCA and making sure that, there's not these problems with any kind of fraud, and making sure that it is you making every purchase.
Yeah, definitely. And I suppose as well, I guess it kind of depends on what you're buying, right? I mean, I remember there's been times where I've bought, I'm trying to think of like, I think there was a time when I was trying to buy a new bed when I redid my room, and it was just a really expensive thing, but it didn't accept my card for some reason. And I remember, ordinarily you'd probably think, go to another retailer or go somewhere else. But because I was so set on this one thing, it was a case of actually, I'll wait and see this through, try and figure it out. And, I think as well, if it's something you need, more often than not, you'll probably try and find, a way to make it work and get the payment through. But I think as well, sometimes if you're online shopping and sometimes you just think, I'll just buy this, and then it doesn't work, you're like, all right, well, I don't actually need it then, maybe it's a blessing in disguise, I'll save some money. It's one of those ones, I think. But no, it's definitely interesting to see, how it will develop, and if smaller organizations and smaller businesses are able to, really improve their SCA, and in turn, find that growth to really compete with the big dogs in the industry. Polly, Tom, either of you fancy going next?
I always go last, so I'll go next, just to change things up a little bit. So the story I've got today is about Klarna, the global payments network. And Klarna have announced a partnership with the Money Advisor Network, which makes it the first buy now, pay later to partner with the network, as it helps consumers access free and impartial debt advice quickly. The partnership marks the next stage of Klarna's wider efforts to promote healthy spending. So this comes not too long after the announcement of Klarna doing their opt-out tool. I don't know if you remember that. We did talk about that on the podcast, however long ago that was. So this is sort of like another thing for Klarna, showing how it's supporting its customers to borrow responsibly, because the opt-out tool was about how they were enabling customers to pre-decide not to use credit. And sort of they're also doing work with Fair Finance as well to ensure their terms and conditions are clear and simple to understand. And just in general, I think Klarna are doing quite a lot of work at the moment just to kind of break down some of the stigma around buy now, pay later companies and services and their products, to sort of help people with their finances in general. So I thought this was quite an interesting thing, obviously. So with the partnership, Klarna will signpost debt advice services from members of the Money Advisor Network to its customers, and this will enable individuals who are concerned about their finances to access 24/7 support. And those who would like independent and free credit advice are also able to do so. And obviously, this kind of comes ahead of Consumer Duty, which will be implemented by the FCA not too long away. Actually, I can't remember the actual deadline, but this is going to set higher and clearer standards of consumer protection across firms and will require companies to put their customers' needs first. Obviously, this is kind of a step with that. And I just thought it was a really interesting one to talk about, because I feel like I said, we're seeing Klarna do a lot in this space currently of helping sort of consumers kind of take control of their spending and their debt and their finances. And specifically, I think we talked the other week about how kind of tricky it is sometimes to understand your own finances and to sort of break down what things actually mean when it comes to your finances. And not only that, but like the risks associated with that. So obviously we've talked about buy now, pay later so many times over the past few years, both on the podcast and just on the Fintech Times website itself, and how, there are a lot of risks associated with it if you don't know what you're doing, as the same with a lot of other payment methods and investment methods and loans and things like that. There are a lot of risks when it comes to finance if you don't know what you're doing. So this is kind of an attempt from Klarna, I guess, to help break that down, especially when it comes to sort of younger consumers on the social media, and just helping people to understand how to use their money correctly. So personally, I thought this was a really great thing to do, and I think it's a really great thing to see a company like Klarna doing it, because obviously they're very popular in the buy now pay later space. But also just in general, it's good to see someone leading by example, I feel, because I feel like that, again, that's something that Klarna feels like it's doing a lot, especially with its marketing, that they're trying to show other people how to be good, for want of a better word, buy now pay later companies. So I thought that was really interesting. So I just really want to talk about this today, and see what you thought about the service in general, but also just, I guess, about kind of where we are in terms of financial education for consumers, and especially in the run up to Consumer Duty. Is that something that we need to be thinking about even more as an industry to have before this gets implemented? But Tom, what do you think?
Yeah, I think this is one of the best parts about obviously Consumer Duty. This is the whole point, right? Why it's coming in. I think it's the end of this month that it's coming into play. And I think this is we've spoken before in the podcast about Consumer Duty and maybe some of the challenges that it poses to firms and how they might struggle to comply with some of the rules that Consumer Duty is bringing into play. But this is one of the reasons why it is coming into place, and how it's going to benefit consumers. In this case, it benefits Klarna as well. I think it's something that it's good publicity, right? Like, we're talking about it now, and it kind of works both ways. That that's going to boost their image as a more trusted place to go. People are going to think of Klarna as, who do I trust when I come to for this sort of service? And it's a bit of give and take, I guess, between Consumer Duty and these firms and who complies with it the best. But as you said, Klarna is one of these the front runners, I guess, in terms of how they're dealing with it and how they're implementing services to support their customers. This is a big step. We've spoken about sort of financial education as well quite a lot in the past, and this is something else that really just supports consumers, and it doesn't really have any negatives for anyone involved. Like, Klarna definitely aren't being negatively impacted by this, and neither are the consumers. So it's just a case of, if it's done properly, like we're seeing here, this is something that can benefit everyone. And one of the reasons why Consumer Duty is such an important thing, and something that can do so much good in this country for the industry. So I thought really it's just good news all around. I think it's quite rare actually that you see something that is beneficial for everyone. And this is one of those rare cases that I thought this is a good example of that.
Yeah, absolutely. I love how you said that there's no negative here. Like, there's no one being screwed over. Like, and I think that's the sort of the key thing to remember when it comes to financial education. People understanding what things actually mean and what their finances actually mean benefits everyone, because then they are more informed consumers of the services that companies are providing. And it just helps everyone, I think, to function in the way that they want to function. Companies don't want to have to, you know, make people go into terrible financial situations because they haven't used their product correctly. So I think, like you say, it's all around just great stuff. But Francis, what do you think?
Yeah, definitely. I think there's really not much to say other than, Klarna is doing great things when it comes to, customer welfare. I mean, following from the opt out, which was, I think it was launched last month, right, if I'm not mistaken. But yeah, I mean, that's like, it was the first sort of step in, I guess, you know a bunch of moves it's making to really promote financial wellness amongst its consumers and potential consumers as well. And I mean, as Krista Griggs from Fujitsu points out in the article, is when you see one organization set a standard, and it's not even just one organization either, it's like it's potentially the biggest BMPL organization there is, right? I mean, there's an argument to be made at the very least. But when one sort of domino falls in this sort of thing, like, the others will follow. And I think when it comes to credit awareness, I think it's one of the most important things people have to learn, because responsibly using credit can be a godsend in a time of crisis. And it's just learning how to do that properly, right? And I think that's what, this partnership is really going to enable. And I think I mean, you guys have said it really. It's like, where is the downside to this? I don't think there is one. And I think, all things considered, it's great to see that Klarna's doing this, and it's hopefully others will follow suit.
Yeah, absolutely. Couldn't have said it better myself. Tom, why don't we go to you for our last article of the episode today?
Absolutely. So, sort of concluding our trio of payment related topics, one of the articles that stuck out to me in the last week was that the financial management platform Solo has launched some financial tools to help independent contractors in the US. And the reason I thought it was interesting is because I felt it's quite timely. There's an implementation of California's Prop 22 law, which came in earlier this year, and that saw delivery drivers basically officially categorized legally as independent contractors, which meant they weren't entitled to like holiday and sick pay, but they did get some like benefits. I forget actually what some of the benefits were, but sort of insurance based, I believe, as well as New York's more recent delivery driver bill that actually imposes a nearly an $18 minimum wage for food delivery workers. So that starts this month, I believe. So basically, what Solo's new tools are doing, they've got a new smart schedule tool. So that's scheduled to each individual user. So that can be like a food delivery worker, and that will highlight them based on the data of the past data they've collected for that month or this period of the year, as well as other data that talks about or tells them about what's happening currently with the sort of space in terms of food delivery or whatever industry they're in, about roughly how much they're going to earn per hour across each job that they have linked to the app. And it's just trying to help people work, people who don't flexibly work that are independent contractors, to work the sort of right job at the right time and to help maximize their earnings, which is something that's quite difficult. If you're managing yourself, you're a one-man business, you're making all your own money, with multiple different apps sometimes. So I think this is just quite a good example of how fintech is supporting people who might struggle to ensure that they get enough pay to live, basically. And it works alongside in the US these bills that in some cases negatively affected delivery drivers, but in the case of New York City, really improves how much they're earning in most cases. So I thought, this is just a good example of how fintechs can support people in all walks of life. In this case, how much they're earning if they're sort of an independent contractor. And something else that stuck out to me was Solar also doing like a pay guarantee program, which essentially says that if a user's daily pay falls short of the predictions that it gives them, Solo will pay its users the difference. So I thought it was just quite a cool initiative, something a little bit different regarding how people work, how they can make sure that they're earning enough. And I just wanted to get your guys' take on just the space really and how fintech is supporting people in different industries, and certainly in this case, how much of a benefit just simple tool like this could really impact quite drastically how much people are earning per hour. So, Paulie, I'll come to you first.
Yeah, no, I think you've hit the nail on the head with saying how fintech can really change things for people in ways that I don't think necessarily you'd think about. And I've always sort of firmly held the belief that fintech works best when it is working within a niche, and almost the smaller that niche, the better. And this is a great niche, like delivery drivers in America. What a great niche that is! But at the same time, this tool that has come from Solo is, obviously it's going to change things for people, like really quite drastically, I think. And I think that is fantastic, and especially when it comes to sort of independent workers, contractors, freelancers, what we probably call them in the UK. These sort of one person shows, the one man shows, they kind of do need the help because obviously it's a bit of a dicey economic situation at the moment everywhere. And when you're working on your own, you have to do everything. You have to sort out where you're going, you have to sort out your schedule, you have to book your jobs, you have to do all your emails and admin, all the rest. So having a tool like this that can help to really run that business effectively, help to automate some parts of it and just optimize their work in general as well as their pay, I think is brilliant. And I think it's something that absolutely is so beneficial, and I hope is sort of implemented in some way across like other areas as well, because I think this is a great one for delivery workers, but this could very easily be used across other contractors and freelance industries as well. So it is fantastic. And yeah, like I said, it's all just about having these little tools. So this probably sounds like small fish for I don't know, some of the bigger fintech firms out there. But at the end of the day, it's doing a job, and it's doing that job really well. And it's helping people to manage their finances, increase their take-home pay, and work better while still retain, their flexibility and all the rest of it. So you're making such a difference to a small set of people. Why wouldn't you want to do that? And I think, especially with how everything is and the job market, I can't see an issue with this at all. I think it is fantastic, and I hope a lot more people follow suit with it, to be honest with you, because like I say, just this is what fintech is for. This is where fintech does so well and excels really well. It's the wonderful little things like this that just help people. That's what fintech is for. That's what I think fintech should be for anyway.
Yeah, absolutely. And I think something you said there about how it can help, sort of different industries, how other people in similar spaces could use similar kind of initiatives to be supported. I think in my last job, I used to get quite a lot of Ubers and Bolts. I used to start really early hours of the morning, so there's no public transport. And the amount of times I was speaking to the drivers of these, using these apps, and that, they're all talking about, always having to switch between Uber, Bolt, other options as well, to kind of try and maximize their earnings. Some pay them good money sometimes. Sometimes there's certain days where one app isn't paying as much as the other app, and they talk about quite a lot. I was always really interested in just how it worked, really, getting a living off of these types of apps. And a lot of these drivers were always saying to me, I'm struggling. It's hard to really maximize the earning. They don't pay enough sometimes. You have to always switch between different apps to try and make enough money basically to live. And I thought this kind of initiative would really support that kind of industry as well. Obviously, it's very similar. In some cases, like Uber, they're running the same. It's not food delivery, but it's still Uber that's running these services, and it's something that could benefit people across the world. Definitely in this country, from my experience. And it would be interesting to see if we can get similar kind of initiatives and services from Solo or maybe another provider close to the future in more regions of the world. Because, as you said, I think it's another one of these examples of it does benefit people hugely in their day-to-day lives, and certainly freelancers and drivers in the UK could definitely benefit from something similar as well. But Francis, what's your take on this kind of service?
See, I think this is where the podcast can get quite fun because, hearing what Polly's views were is like super optimistic. And while I think my underlying tone is probably similar to that, I think the first time that I read through this, like my initial response was more like concern, right? Because, my thought process I mean, after hearing what you said actually about the minimum wage, I think you said it was $18, right? So I mean, when you compare that to the minimum wage in like the US and New York anyway, that's $7. And I think when you compare sort of those two figures, I mean, it's over double, right? And I think that in and of itself is a great start for delivery drivers and independent contractors. But I think what kind of shocked me, or I should say concerned me a bit from reading the article from Solo, was this idea of really highlighting work during the peak hours. And while that makes sense on paper, because peak hours, everyone wants to work those because that's when they get the most money. That's when there's going to be the most sort of like, I suppose I don't want to say sort of influx, but that's probably when there's the most traffic, right? But I think what's probably concerning is this idea that the demand might, or sorry, the supply might outnumber the demand, right? There won't be enough sort of orders going around that each driver is really able to make the most of the offering. But then obviously you see like you mentioned, the payment sort of compensation or that part at the end of the article where it sort of explains that Solo will be paying the difference of the estimation if the amount isn't met. And I think that is a sort of a saving grace really, and it ensures that people are able to make a living even if they have a bad day, if the estimations are high. But then it got me thinking, that is that sustainable for Solo, right? Because at that point they're not, it's good for the workers, but surely that's not going to be sustainable in the long term. So those were the sort of initial thoughts that I had, and I was like, I know they're more on the negative side of things, but I don't know. I thought they were probably worth mentioning. But overall, I do think it is really good, and I know that is probably sort of contradictory to everything I've just said, but I do think the service is really beneficial. And I mean, like you guys said, it would be good to see some sort of, you know, a minimum, and if it's not met, we're going to ensure that you survive type of thing. And I think that is really good, and it is really reassuring for, freelancers, independent contractors, whatever you want to call them. But, there were some concerns from my point of view, at least.
Francis, always got to play the devil's advocate.
I know. I literally wrote that as well. I was like, I'm always the devil's advocate when it comes to these. But it's true, though, I think. I mean, it's great, but I think, is it too good to be true almost? It's like, if people aren't working because there are no deliveries to make, they're still going to get money because that's what they've been promised. But is it a case of, how long can that last?
Yeah, I was just trying to work out actually kind of how the backbone of the sort of offering takes place, and if what kind of charges there are. I'm sure that there's some kind of charges in regard to using the service. So maybe that's how they're kind of covering that and have a solution to that. But yeah, I think it's an important point to bring up, really, because as the saying goes, if it seems too true or too good to be true, it probably is. So hopefully we can see some more solutions like this being introduced, but obviously only if they're done in the right way, and not necessarily talking about the guarantee that they're offering. I think that's certainly something to drive people to their service, but just see how these kinds of offerings can improve people's lives, and we'll just hope, really, from our point of view, that we can see these work and stay working for as long as possible, really.
I mean, I do just want to end that. I do think this is very good. I want to make that abundantly clear. I'm not saying this is a bad idea in the
So
slightest.
you have no
I
backbone.
do think...
Commit to it. Come on.
If you're going to be the
I'm
bad
saying
guy,
it. Look. No.
Don't flip flop, Francis.
I'm not. I'm saying I think it's a good idea. I just think that there are some concerns with it. That is, in theory, on paper, it's great, but in reality, I think there might be some issues. But we shall see.
We shall see. Anyway, let's move on then. Thank you so much, guys, for bringing those articles today and the discussion that followed. If you want to hear any more about what we've talked about today or anything else from the fintech world, head on over to thefintechtimes.com, where there are plenty more news and insights on there. But let's do what I learned this week. So each week, so much new information crosses our desks, being on the editorial team, that we are learning something new all the time. So we thought it'd be fun to share that with our listeners. So Tom, what did you learn this week?
So this week I saw that 26% of UK adults have used generative AI, such as chatbots, which kind of equates to around 13 million people in the UK have already used generative AI. I mean, obviously we've spoken a lot about the rise of AI, but I think it's just quite cool to consider how many people where we live are engaging with the tool, and how many people it's really affecting day to day.
Amazing. And Francis, what did you learn this week?
So this week I learned that there is a gap in the market for fintechs to help organizations that want to go green, especially when it comes to solar lending. Many traditional lenders are turning down SMBs' applications for panel installations due to high prices, and I found the guest post from Sunstone Credit on the topic really interesting, and I'd highly recommend our listeners check it out.
Awesome stuff. And then what I learned this week was that TikTok is becoming the go-to place for financial advice, with 25% of 18 to 24-year-olds preferring to go to TikTok for financial advice, which I thought just kind of reflects what we're talking about a lot at the moment. But anyway, thank you guys. That brings us once again to the end of another fantastic podcast about fintech. Thank you very much for coming. Thank you very much for listening. And I'll catch you on the next one.
See you guys next week.
Where maybe we all agree. Who knows?
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode, and continue the conversation using #TFT News and Views, and follow us at the Fintech Times.